Welcome back, Tribe. Today's episode is going to be about how to properly invest in yourself, like basically a professional stock trader. And I'm going to use a lot of analogies that are related to the markets. For some of you that are into trading or looking to learn, might be a pretty interesting video for you guys. But wanted to tell you about the biggest financial mistake I see guys making every single day. And I'm not talking about crypto or the meme stocks. I'm talking about how they're investing their most valuable asset, themselves. You see, most guys understand money markets on some basic level. They know you need to invest to grow wealth. They know that just letting your cash sit in a low interest savings account is basically watching it die slowly. They get that part. But when it comes to investing in themselves, they're making rookie mistakes that would make a first-year finance student cringe. Think about how the stock market works for a second. You got your blue chip stocks, they're reliable, steady growth, solid fundamentals. You've got your speculative plays, those high risk, high rewards. You got your dividend stocks, they consistently pay out over time. Now apply that thinking to personal investment. Your skills, your knowledge, your physical health, your social connections. These are all stocks in your personal portfolio. But most guys, they're operating like someone who just dumped their life savings into whatever stock their buddy mentioned at a bar. No strategy, no due diligence, no understanding of the market they're playing in. Let's break this down like a real portfolio analysis. Most guys are heavily invested in depreciating assets. They're pouring time, energy, and resources into things that have zero or negative return on investment. I'm talking about the mindless entertainment, the dead-end relationships, and social media validation, the penny stocks of personal investment, if you will. Meanwhile, they're ignoring blue chip opportunities staring them right in the face. Learning a high income skill, that's like buying Amazon stock in the early 2000s. And building genuine connections with successful people, that's like getting in on a pre-IPO deal. Taking care of your health, that's even better. It's like having a dividend stock that pays every single day of your life. And here's where it gets really interesting. In the stock market, you have to wait for the right time to buy. In personal investment, the best time to buy is always now. And the compound interest is insane. Every day you spend learning compounds. Every genuine connection you make multiplies unexpectedly. Every healthy habit you build pays dividends for the rest of your life. Here's the thing about social capital that most guys don't get. It follows the same principles as compound interest. Every valuable connection you make has the potential to lead to more connections. Every skill you master can open doors to learning other skills. But just like in the market, you have to know where to invest your limited resources. We only have 24 hours in a day. Think about the average guy's investment strategy. He's putting massive amounts of time into what I like to call junk bonds. That's your superficial relationships, shallow entertainment, activities that feel good in the moment, but they have zero long-term return. It's like dumping your money in a company just because you like their logo without even checking their financials. It's insane. And let me break down what a solid investment portfolio should look like. First, you need your core holdings. These are your fundamental life skills: communication, physical fitness, emotional intelligence, and financial literacy. These are your blue chip stocks. They might not be sexy, but they're the foundation of everything else. Then you got your growth investments. These are the skills and connections that have potential for massive returns. One could be learning to code, starting a side business, building relationships with mentors. These are like buying into emerging markets. They're higher risk, but the potential payoff is huge. And here's where guys fuck this up badly. They don't diversify. They go all in on one aspect of their life while letting everything else deteriorate. Maybe they're crushing it at the gym, but their social skills are in the gutter. Or they're making great money, but their health is tanking. That's like having a portfolio that's 100% in one stock. Any market downturn and you're wiped out. And let's talk about the timing. There's this concept in investing called time in market beats timing the market. Same thing applies here. The guys who win aren't the ones waiting for the perfect moment to start improving themselves. They're the ones who've been consistently investing in themselves for years. Here's another market principle that applies perfectly to personal investment. The risk of loss is always highest when everyone else is being greedy. When everyone's chasing the same thing, whether it's crypto, a trendy career path, or a particular lifestyle, that's usually when you're buying at the top of the market. So let's talk about something that separates successful investors from amateurs. It's understanding a market cycle. You see, in the stock market, you've got your bull markets and your bear markets. In life, you got periods of growth and periods of consolidation. The smart investor knows how to play both. During your growth phase, maybe you're single, maybe you got extra time or resources. That's where you go aggressive. That's when you double down on learning, building connections, or developing a new skill. It's like having extra capital during a market dip. Smart investors don't waste these opportunities. And then you have your consolidation phase. Maybe you're dealing with extra work stress or family obligations or health issues. This is when you focus on protecting your gains, maintaining your core assets. Too many guys try to play the same aggressive strategy during these periods and end up burning out. That's like trying to day trade while you're working a full-time job. It's a recipe for disaster. Believe me, I've blown up a few accounts myself. And here's another critical market principle, the concept of sunk cost. In trading, smart investors know when to cut their losses. They don't keep holding on a losing position just because they've already invested so much. But look at how most guys handle their personal investments. They stay in the dead-end jobs because they already put in years. They keep toxic friends around because of history. They stick with failing strategies because they've invested time in them. Let me tell you about one of the biggest scams in the personal development market, the get-rich-quick mentality. You see these guys promising overnight success, instant transformations, quick fixes. It's the same as those penny stock promoters promising 1,000% returns by next week. Any legitimate investor knows that sustainable wealth comes from smart, consistent investment over time. The real game is spotting undervalued assets in yourself that the market hasn't yet realized. Maybe you've got a natural talent for connecting with people, but you haven't leveraged it. Maybe you've got experience in a field that's about to boom. Maybe you've got insights from your struggles that could help others. These are like finding undervalued stocks before the market is catching on. But, and this is crucial, you can't just identify these assets. You have to develop them. Having potential is like having cash in your account. It's not worth anything until you invest it somewhere meaningful. And here's something else the market teaches us, the power of insider knowledge, Nancy Pelosi style. Not the illegal kind, but the kind that comes from being in the right rooms, knowing the right people, understanding trends before they become obvious. In personal development, this means putting yourself in environments where the growth is inevitable. Think about the guys who hang out at the gym regularly. They're not just building muscle, they're absorbing knowledge from more experienced lifters, learning about nutrition from people who've done the research, picking up on trends in fitness before they hit the mainstream. That's insider knowledge. That's being in a growth environment. But most guys, they're getting their investment advice from social media, from people who are just as lost as they are, from sources that have every incentive to keep them mediocre. It's like taking stock tips from a YouTube channel with flashy graphics and zero substance. And let's talk about this risk management. I'm sure you've heard that word before, because this is where a lot of guys completely drop the ball again. In the market, smart investors never risk their entire portfolio on one trade. They set stop losses. They diversify. They protect their capital. But in life, guys will bet everything on one relationship, one job, one path with zero backup plan. You need to think about your life like a hedge fund manager thinks about their portfolio. You got your safe plays, your day job, your core skills, your reliable relationships. Then you've got your calculated risk. These are your side hustles, your ambitious projects, and newer connections. The key is balancing them so that not one single failure can wipe you out. And here's another market reality. Connections are healthy and necessary. When a stock runs up too fast without the fundamentals to support it, it has to come back down. The same thing happens in life, man. If you've been growing fast, taking on new challenges and pushing your limits, eventually you're going to hit a plateau or face a setback. It's not failure. It's a natural part of the growth cycle. Smart investors use these corrections as buying opportunities. When the market dips, they don't panic. They look for value. Similarly, your setbacks are chances to reassess, identify weaknesses in your strategy, and find new opportunities that you didn't see before. And here's where personal investment has a massive advantage over the stock market. You have insider control. You can literally improve the fundamentals of your main asset, which is yourself, at any time. You can't call up Apple and tell them to improve their profit margins, but you can decide to learn a new skill today that makes you more valuable tomorrow. Think about it. And let's talk about something that most successful investors understand that average guys don't. It's the concept of asymmetric returns. In the market, this means finding opportunities where your potential upside far outweighs your downside risk. In life, these opportunities are everywhere, but most guys are too afraid to seize them. Think about learning public speaking, for example. What's the downside? Maybe you feel uncomfortable for a few hours. Maybe you stumble through your first few presentations. The upside, though, it could literally change your trajectory of your entire career. That's asymmetric returns. The potential gain dramatically outweighs the potential loss. Same thing with building relationships with successful people. Worst case scenario, they're too busy to connect. Best case, they become mentors, open doors you didn't even know existed, show you opportunities you couldn't see before. The risk-reward ratio is insanely in your favor, but most guys won't take that step because they're too worried about the minimal downside. Here's another market truth. The best investors have a thesis for every position they take. They know exactly why they're investing in something and what they expect from it. But look at how most guys approach personal development. They do what everyone else is doing, follow whatever's trending, with no clear idea of how it fits into their overall strategy. You need to have a thesis for every investment you make in yourself. Why are you learning that skill? How does it fit into your greater plan? What's the expected return on the time investment? Without this clarity, you're just throwing darts in the dark. And let's talk about something that separates the great investors from the rest. They know how to let the winners run. When they've got a position that's working, they don't cut it short. They add to it. But what do most guys do when they start seeing that success in an area? They get comfortable. They plateau. That's when they stop feeding what's working. If something in your life is giving you positive returns, a skill that's opening doors, a relationship that's maybe helping you grow, or a habit that's improving your life, that's not the time to get comfortable. That's the time to double down, add to your position, increase your investment in what's working. This brings us to perhaps the most important principle. It's the power of reinvestment. The truly wealthy don't just make money. They take those profits and reinvest them in new opportunities. Every bit of success, every lesson learned, every connection made should be reinvested in your next opportunity. Did you learn a valuable skill? Use it to learn the next one faster. Make a good connection, leverage it to make 3 more. Have success? Use that confidence to tackle something even bigger. That's how you create exponential growth. The market is ruthlessly efficient at pricing in value. If something is genuinely valuable, eventually the market recognizes it and prices it accordingly. The same is true in life. If you're consistently investing in yourself, building real value, the returns will come. Maybe not on your preferred timeline, but they will come. You're the biggest investment you'll ever make. Every day, you're either appreciating or depreciating in value. There's no staying the same. The market doesn't care about your excuses, your past failures, or your good intentions. It only cares about value. Are you going to keep gambling with your time and energy like some rookie trader? Or are you ready to start building a portfolio of skills, relationships, and experiences that will pay dividends for the rest of your life? Because unlike the stock market, in the game of personal investment, the house doesn't always win. You win if you're willing to play smart, think long-term, and consistently invest in the one asset that matters the most, yourself. I hope you guys enjoyed today's take on self-improvement, comparing it to the stock market, and hopefully that illuminates some things for you guys. I try to make it a bit clear how self-improvement isn't about going all in one thing or following someone else's recipe or whatever the next meme or the fad is, but really approaching your life like you would a portfolio that's worth millions of dollars, and you tend to it every single day with purpose, with direction, not just blindly following somebody or something that you read. If you like episodes like this with these kinds of analogies, let me know in the comments below. I'm just curious to reading. And as usual, boys, thank you so much for tuning in. We'll see you on the next one.